Hello, all. Get this started in a minute or so.
Recording in progress.
All right. Somebody give me a thumbs up if you can hear me okay. Any emoji, icon, anything? All right, great. Well, welcome everybody. Thanks for joining me for my second solo webinar. Hope you're having a great trading day. And it's Pink Thursday for me. So the markets are up and away. Bit of a trend day somewhat, with the market up about 28 points and the NASDAQ up a lot more. So new record highs in the books. So hopefully you're participating and enjoying this. So what we want to cover today is to go over kind of my take on the market, and then look at the trades that we have open, and then talk about options expiration week, since this is an options expiration week, and take your questions afterwards and see how far we get. So let's take a look at things, and I'll put up my usual screen. So here we are. I guess we're on the SPX, and what you're looking is on a daily chart, a weekly chart, and we don't want the 30-minute, we want the monthly, okay? And if anybody is having trouble, I switched to the white as requested and lowered the resolution, so things should be clear to you here, but pop something in the chat if it's not clear for you, that you can see it. But in any case, we're at all-time highs. In fact, we're about just 10 points away from the all-time high made just 2 days ago. They tried to take it down yesterday and they couldn't. But do notice that we are getting a little bit of a MACD crossover. So we're seeing some divergences. We're still in the overbought area on a daily basis. And that doesn't mean I think that we're going down. I think we're going to have some type of correction. And the second half of July, after options expiration tomorrow, tends to be that time frame where we get a little bit of sideways to down action into August and September. So some people say that the market peaks right around July 15th for the year until the fall rally, but we'll see if that comes true. But regardless, if you're bearish, you're losing money, and hopefully nobody is in that camp here. We have a hedge on, as I'll talk about a little bit later, but from the bottom all the way to the top here, the weekly chart, definitely the MACD is solidly bullish with the fast line over the signal line. We're not quite to the overbought level on the weekly, so we have more room to move up, but I am seeing some divergences, and I'll show you some other things I'm seeing that tell me that a pullback is imminent. And this is not the time to be going in aggressively. If you haven't been aggressive to this point, it's best to wait for some type of pullback. Monthly chart looks just the same. You can see here 3 months, and we're barely getting into the prior month's candle. So it's a bull market, and the MACD on the monthly, a strong signal, is turning up. So SPX 7,000 by the end of the month, end of the year, I should say, not end of the month, is definitely a possibility. Looking at the NDX, we did make a new all-time high today, and looking really good. Again, the MACD is showing a bit of a divergence. We're making new highs, but the MACD fast line is over the slow line. You can see on the weekly, looks just as good, fantastic, nothing to worry about here. RSI at the 65 level, and then we have the monthly, which looks really good, and nothing to complain about here with the MACD turning back up after the downturn and that big candle on the downside, or a hammer, if you will. Last thing we'll look at is the Russell, which is trying to play catch up and doing a pretty good job of it, if I say so. MACD, similar to the other two, we do need to take a breather, and low volume markets like we have now and in August can tend to initiate some what I'll call just some bearish action. And I'm not bearish by any means. Weekly looking good, looking better, not as good as the NDX or the SPX, but there's a way of rotating and correcting through price, and there's a way of correcting through time. And if we keep rotating amongst the different classes of stocks, the different sectors, the different sizes of stocks, small, medium, large, the correction could be almost imperceptible. But I do think we need a break, and you can see it here. If we take a look at what's going on for this rest of the week, we had about a 92 point expected move, and for the rest of the week, at least until tomorrow, you can see here we have two expirations, the morning expiration, so everything here expires right on the close, and then right on the open, I'm sorry, and then on the afternoon expiration, we have about 36 points left into the last day. So we definitely have a good amount of points, or a good amount of range, plus or minus 36 points into tomorrow. So the last 2 weeks, we have stayed inside the options implied expected move. And in fact, at least until this morning, we were kind of unchanged from last Thursday. So we've gone nowhere, up and down and what have you, but we'll see. Again, I wouldn't be selling tomorrow's calls or tomorrow's puts for anyone's money, because I think this 36 point move is understated. Taking a look at the VIX and what it tells us, as I always tell you, that it's always a good idea to see what the VIX options are pricing like. And if I go back to the chart, here we are at 1668. It's a little messy here. I apologize for that. But we're making new highs. And one thing that kind of also bothers me is that we're not making new lows on the VIX. And that's not a bad thing, but we are at 1667, but why aren't we in the 15s or the 14s as we make new highs? So that's a bit of a divergence relative to prior all-time highs, and not a big concern, but let's take a look at what the options look like in terms of the monthly expiration for the VIX. And what I like to do, just to remind everyone, and especially if there are new people here, take a look at the current VIX value. It's about 16.67, 16 2/3. Let's call it 16 and a half. And I'm using the monthly options to demonstrate what I look for, because they tend to be a lot more liquid than the weekly options. And so if we say, I'm going to buy the 17 and a half calls, which means I'm bearish on the market, I want to hedge, I'm going to pay about $2.80 for those VIX calls. And if I want to buy the puts, which means I'm bullish on the market and bearish on the VIX, go to the 16 halves, and those are pricing at like 38, 39 cents. And with that kind of divergence or disparity, you can see that these are about 9 or 10 times, forget my off-the-cuff math, maybe 7 or 8 times the 16 and a half or 15 and a half. No, there we go. I can't even subtract 1 from 16 and a half. All right, so those are priced at 15 cents, and these are priced at 282. So yeah, we have about 12 to 13 times. What does that tell me? It's one data point. It tells me that there are buyers of calls in the VIX that are hedging. And if you saw the action this week, you know that we had a day, like yesterday, where we did come down. Obviously, we had news that caused that, and we popped back up. So there's still people willing to buy this market. So overall, just be careful, and we could get a little bit of a down day out of nowhere. A 1% down day. I don't think we've had one in a long time. So we are overdue, but like I said, I think a lot of people who have been waiting out for a pullback are going to be desperate to get in and take this market. So with that, I'm bullish, but a little bit cautious here in the short term that we might see a little bit of a pullback after options expiration. So let's take a look at our option trades and see if I can get this set up real quickly and go to our chart, see our, come on. There we go. Press everything down. So let's take a look at our trades. We are down to about 12 trades, 12 live trades. And for those of you who are new to Option Market Mentor, this is our option trades list. And it's always available next to the form, so you can pull it up. And then you can see here, I've got this filtered by my own trades. Dan and Andy both have their own trades that they manage and put out. Mine, I have 12 of the 24 that are in the room. And you can see over here, we have 4 of the 5 closed trades are mine. So we closed silver, we closed Dollar General, and that turned out to be a good thing. XBI, we took our profits on that. And Dell is another one that we've closed, and just in time, because that's down today. And then we closed another one today, and that was RTX for a nice profit. So come over here if you want to see the closed ones. After a week or so, these are archived, and so you can come over here and see them, which means that for those who are take about a week or so to finally look at the list, we put them in closed status, and then eventually we archive them. So and they'll be there for about a month or so before they're moved out of the way and to kind of unclutter things. All right, so we'll start out with Apple. So what's happening with Apple? We've got a call, an August call. Apple has earnings on July 30th. It's done nothing since we put it on, but I really like how it's setting up, and I'm positioned in this for some bullishness ahead of earnings. Hopefully, the anticipated market turn doesn't really put the kibosh on this idea, but we've been going sideways for days. We've not done nothing, but you'll notice that our options, even though we've gone sideways for a couple of weeks, and normally without earnings, these options would lose some of their value, and they're not, because these are expiring after earnings, and every day a little bit of more volatility gets pumped into these options, which means that even though we've got about 10 days of decay, we have only lost about 3.3%. So I like Apple. I love how it's setting up, and I think she'll get ready to go soon. Don't bet the house on it, though. ADI, another put sale this week. We're down about 11%. Of course, nothing like the stock going down immediately the day after you put on the put sale, but we're only down 11.76%. These expire next week, and hopefully we won't have another scenario like we did the last time we did ADI puts, where it just kind of fell out of bed, and I think we lost money on that. probably around late winter, early spring of this year. AMD, what a great one that has been. Down a whopping 81 cents. This one has earnings, I think about July 30th or so. What do I say? Uh, I don't say where it is, but we have earnings. I'll be warning about that. But we've taken a couple profit targets and it's sitting at 65. Well, we're at 95% at the current moment. So I wouldn't blame you if you took the 140 calls and you rolled them up to, say, the 150s or the 155s if you want to kind of harvest some of the premium out of them. And that way, if the stock falls down, then you will lessen your risk. But officially, I'm not going to do anything with this. But if I do see some serious correction, I might decide to do it. The better thing to do would be to keep your quantity in check and not worry about rolling it. Now, here's one that we captured yesterday. We put this one on yesterday, Baxter International, and it's not starting us off very well, down 2% and making another 52-week low. And if it were just Baxter, I would be more concerned, but it is all of healthcare today that is down and affecting this. This has earning on July 30th. This is a long-term play, and I don't seem to have it on the active trade list. I'm not sure why that is. I apologize. I will get it there after the webinar, but in any case, we're just starting out. We sold a put, a 25 put in January, and we bought a call in January to express a bullish recovery on this stock. So let's see what happens with it. Again, it's not starting out too great for us. If you're not in it, you certainly can start out, and we have a 25.50 closing stop and a weekly closing stop, that is. BLDR, after it made a high up here, it's been consolidating, going sideways, and not really doing much ever since we took our first profit target. In fact, we are almost right at our last profit target since the last time. Don't like this candle. Don't like the fact that the MACD is coming in. I'm going to watch this one. If home builders are going to roll over, then I might have to do something with this and just, call it quits on it. It's just not working out very well in terms of momentum and sustaining that momentum. Now here's Costco, one that we rolled, and this one we're out to August, and this is a good idea why options expiration, and as I'll get into in the presentation, why we want to roll a few days before expiration, because this kind of thing can happen. We are within a couple bucks of the short strike, which expire tomorrow. So if you like living on the edge, then you probably still have this on and you want to see what happens. But for me, I've had my share of gamma squeezes, and hang on one, guys, for 1 second. There's someone at the door. I'm going to be right back. All right. Sorry about that. A little noise. All right. So we now have the 925, 900 put spread, bull put spread. And I'm not liking the fact that for the first time in a long time, Costco is at below the 200-day. I don't think it'll sit there for very long, but Costco's part of the consumer staples group, and consumer staples have been pretty weak. So if I take a look at XLP, I don't expect to see strength. And in fact, we see a little bit today. It's up about 39 cents, but everything in the consumer staples group has been kind of weak of late. So I'm not worried about Costco. We rolled it out and we rolled it down by about 25 bucks to give us more room, but I don't think this Costco will last too long down at these prices unless there's something I'm not aware of. And so we have a 925, 900 bull put spread, and we did take a profit on the one we rolled from August, by the way. CrowdStrike, along with all the rest of the cybersecurity stocks, getting hit in the past week, so some profit taking ensued. And you can see today we've got getting a little bit of a bounce. We're down about 30% on this particular put spread, but we've been there before with CrowdStrike, and it seems to come back. And cybersecurity stocks aren't going anywhere. In fact, there's more and more demand for them as time goes on. And if we look at the target, we took about half off at our 165 target, and now we are at about 397. We sold these for 305, so now we're down 30% on the second half of these. Nothing to worry about yet at all, and we basically have the 430, 400 put spread, and that's about $42 out of the money, so not a worry for another day, if a worry at all. So looky, Disney in the House of Mouse is waking up a little bit. You can see here that we have about 1.25%, and we're looking for our next profit target at 895 here. We have a call spread at 115, 130 in September. We're certainly going to see earnings before we get to that expiration. So hopefully we'll get a little bit of a boost here on the House of Mouse. We really need to see some momentum return after we hit that 124.69, but Disney is looking good for us. Let's see the next one. iBit. Now I'm looking for an opportunity to roll these because we sold this for $1.13, and we took a 50% profit target, 50 cents we harvested, and now we're at 22 cents. I don't like holding on to 22-cent options, but I kind of was getting greedy on, I guess it was Tuesday when we were down a bit, but we didn't go down any further, so I didn't want to roll them into just kind of one down day, but that didn't turn out to be smart because here we are back up for a couple of days, but we'll get our chance. I wouldn't see any reason to not roll this when we get a little bit of weakness, and that's what I like to do. What I talked about last week is to roll these into some weakness that we see in the stock. It's always want to roll puts with the wind at your back, and you want to roll calls when the stock is up, not when it's down. That's the better way to go, and you get more more bang for your buck, so to speak. PLTR, what a beauty. The only problem with this one is that we have sold puts, we haven't bought calls, but we really haven't gotten a juicy opportunity to buy calls on this. When I say juicy opportunity, I'd like a good pullback before I commit capital. I'm not a momentum chaser, but selling puts kind of covers up a lot of crime, so to speak, in terms of trading. So you can be wrong, but still make money. And that's what I like about puts. And we do have the August 1st put, which comes ahead of earnings. So August 4th is when the scheduled earnings date is. So we sold it for this put spread for $1.88. It's now pricing at about 84 cents. I would have thought by now that this would have been a lot cheaper, but if you haven't taken half off by now, you should, since it's definitely below half of the premium we collected. So make sure that you pay yourself, get out of half to 2/3 of your position, and keep the rest for a little bit more if you have multiple units. All right, so SPY, we bought a little bit of a hedge last week, and so far it's done nothing for us. You can ignore this 960% nonsense. When you have a custom type approach where we bought a 620, 610 put spread, and we sold a 515 put in October, then you can kind of ignore this P&L calculations because these are more straightforward than anything. But this is our hedge. It's $7 out of the money, so it's still in the game. And we just wait for the opportunity. I think we will get a pullback, and these SPY hedges will work out for us. And finally, TLT, um, showing weakness, and I showed this last week, up, down, up, down, up, down, and down. So we saw a bit of weakness yesterday that could have taken us below 84, but we recovered. We're right at the short strike of TLT. And for those of you who haven't been around for that long, we've been selling TLT puts since last year. And last one was a roll from June or July, probably when we got in trouble over here, maybe even May. In any case, I have pretty good confidence that at some point we will get some strength in the bonds. Maybe when it's a flight to safety when the market corrects, but so far, no mas. We're down about 17% on these puts. I'm not worried about them. This is a August 85 put, and we'll see what happens. And hopefully you're in this a bit small, and we'll get some strength from the bonds. But we have 29 days to August expiration, but tomorrow is options expiration for July 18th. So let me check here. I don't see any questions. Okay, let me see here. So thanks for everything. And someone new to option trading, take an idea from the OMM after trade list, like selling one vertical, 720, 750 call. How to do that? Sure. Okay. So how to sell a Meta 720, 750 call spread. So if we come over here, let's take this particular one. So we're in the active trade list, and you see these little two pages, like clipboard pages. So, and you see the instruction that pops up. You can click to copy it to the clipboard, and we can come to Thinkorswim. And let me get rid of this Zoom controls out of my way. All right, so come over here and order entry, and okay, order entry rate. Come on. No, I don't want saved orders. What am I doing? Okay. What is going on? Order entry and saved orders. Okay. Something's not right. So what am I missing here? Bear with me for a second, guys. Orders. Let me maximize this now that we're done with that. Okay. I don't want the order book. These are all orders. Okay, let me type in PLTR. Let me type something else in. Here we go. So we are on PLTR, and if I come over here to the bottom and I say paste order from the clipboard and click on this, and it populates the order here. So you're coming in here, you come into order entry, and you can see I had problems getting that to come up. But what I did is I just clicked anywhere to create an order entry, and I clicked on the paste. And you can also save a custom order template if you want. I've never really done that. Confirm and send, and there you can send the order on Thinkorswim. Give me a thumbs up if that's what you were looking for in terms of selling an order. I think you said something about Meta, but maybe it was more platform specific. All right, great. Yeah, but that's how easy it is just to come over here and just copy it and paste it here. And you can also copy and paste right from the form if you see it there first. You don't have to go to the active option trade list to do that. All right. So let me check for any more questions. I have more questions. Let's see here. Scott mentioned APP. Would I consider a covered call? Well, let's take a look at APP. And app is come in a bit from where it was earlier today. And I'm concerned that this is going to be in a box for a while. And I don't know when earnings are going to be, but let's take a look at a covered call. See, let's determine. All right, so my guess is earnings is right around the week of August 8th. You can see how the implied volatility jumps from 57.78 to 91. So that's my guess that it is going to be after that date. Let's take a look at what open interest looks like. So if I'm hoping that any option that I sell or covered call will decay in case the stock goes nowhere between now and the week before earnings. I want to pick the week before earnings to do so. And so we don't have a lot of open interest here. Whereas this is my open interest column here. 1229, not bad, I guess. Over here, about 119, not great, but liquidity is good. So, what I can do in Thinkorswim, if you want to do that, the bids are acceptable. And if you want to do an at the money or out of the money, you can do either, depending on what your perspective is. So you right click on that strike, you buy covered stock, and you would do it that way. Personally, with a big stock like this, I would be more inclined to go out to August expiration and go just in the money. Look, if you look in here, you can see a lot more open interest in the August 340s, 350s. If you don't want to go that deep in the money, I prefer these priced a little bit more. In fact, I was actually looking at this a little bit earlier today when I saw AppLovin going up. So if you could take a 360 open interest 786, it's okay. 400 or anywhere in between, maybe a 360, 380 call spread. That would be my preference. One, it will hold its value into earnings, but keep in mind it will not expand into full value. And as I'm about to explain in our tutorial, I would not be holding this into earnings just because it's just such a binary event that you could lose either way. But I would, instead of a covered call, and you can do a covered call, there's nothing wrong with it. My preference is not to tie up that much capital and maybe do a spread out there. And you could do one of these. You could buy a put call spread if you're really bullish on it, the 360, 380. And I would come to August 1st, maybe look on a down day, look for a put spread to sell. Let's see if we have good open interest. Oh yeah, down at the 350 strike, but it's a 36 delta. I'm not sure I want to be that close. Yeah, not great, but it's doable if you wanted to sell a put spread to help pay for that call spread. And if you are selling the put spread, you want to do it not in the week of earnings or after. You want to do it in a week before because you want that to fade away. So my ideal, I might do a 345, a 35 put spread, maybe even go even further. Open interest is not great, but where's my open interest column? Yeah, but it's reasonable. 40 cents difference in a stock like this is not unreasonable. So hopefully that helps you out, but nothing wrong with a covered call if you want to do that and you've got the capital, you'd rather play the theta decay game. Let's see what we have here. All right. Buying August 15th CRDO call here while it's down under with low volume 100 strike. Let's see CRDO. Let's take a look at the chart. All right, it's down. Okay. MACD is going negative. Let's look at the weekly. Beautiful weekly. A little bit of a topping tail there. Back to the daily. Looking like it's coming into the 8 or 9 EMA. It has a trend, has momentum. Yeah, let's take a look. So looking at August, only has monthly expirations, and we're at the 98 level. My guess is that hitting the $100 level, is that what kind of put the kibosh on it today? Well, it got up to 104, so there was some momentum behind it. Let's see here. Yeah, I mean, if I don't know when earnings are, I would pay attention to when those are. $100 calls, open interest, a decent open interest, and good spreads, 20-cent wide spreads. Let's see here. And so if we bought 100 and sold what I like to do is, and I don't think I've done a class on spreads. I'm going to do a class on spreads. Basically, we've got maybe the 115s, maybe the 120s, $5.30. Let's see if we can tell when earnings are. It would seem to me that earnings are after August 15th because the September options, the trick doesn't work as well with monthly options. So you've got probably know when earnings are going to be, but it's something I could see doing 110, 100 to 110. And it's your preference whether you want to do like 100, 110 and do more of these or do the wide spreads. And then when it gets to 110, roll up the long strike up to 110. Now you have 110, 120 call spread as you harvest some of the premium. But your choice. My personal preference is to have multiple units of a more narrow spread than fewer units of a wider spread. But either way, the trade, as long as the trade works, who cares which one you choose? All right, so answered that one. That one. Better buy points or time frame. Why is it a good, bad idea? Yeah, I mean, with not a lot of strikes, you know, and the fact that it's coming in, you've got everything positive. As long as it holds up here, I don't think there's any reason why you couldn't take a shot at it here. But you've got a bullish chandelier, bullish PSAR, volatility stop, Momo, and trend. Yeah, I mean, I would probably wait for a little bit more of a pullback, but this looks good. Order entry, give me some more information. What do you mean by that, order entry? So yeah, butterfly initiated for debit, deep in the money, expires tomorrow. Well, usually on a butterfly, so he has a butterfly initiated for a debit that's deep in the money and expires tomorrow. Do you take the loss? Are there any strategies to mitigate the loss? No, I mean if the butterfly is deep in the money, there's nothing to do. You're basically going to have that wiped off the board after expiration. Nothing you can do, and if it's an unbalanced butterfly where you made a little of adjustment to the strikes where they're not even, maybe you made a little bit of money. Hopefully it didn't go the other way, but in any case, the loss is locked in, nothing you can do, just let it roll off, and nothing to do there. So entry is where was where there, yeah, was where the order entry is where the clipboard is to paste from your instructions. So yeah. So Dan put on a $400 August MSTR call before he left, sold half at 100 profit. Any idea on how to handle the rest? So let's take a look at that. So MSTR. I take it that's a August monthly call. So MSTR, it's down about $1.50 today. My inkling, and I usually don't like to do this on a down day, but we're only down about $1.50 on this. Since there's a lot of money on the table here and at risk. So congratulations on the 100% profit. But if this were my option at this point, I'd be clicking on the bid button here and to sell it, and then rolling it down to the 450. That way you have an at the money call again, and you're taking $34 of risk off the table here. Some people don't like to do it. Some people would prefer to just close the option, but I certainly would not sit through another 29 days hoping and praying that it goes higher when it could just as easily come back in. So this is an 82 delta. The chances of it coming back to this price is about 18%. So odds are in your favor, but when I have money in the bag and I can roll to an at the money, if I still am bullish on MSTR, that's exactly what I would do. Harvest the 34.52, you're still in the game, you're still in the money, and now you have a free trade that you can manage differently. And what I would say is that at 34, whatever this price is, 26, 27, if MicroStrategy starts to correct, I wouldn't give it a whole lot of room, no more than say 25% of the premium you're paying here. And before you just say, I'm out, you don't want to give that much back. Okay. So those are all the questions. And if I missed anyone, just let me know, but let's get to the tutorial part, and hopefully you'll find this interesting. And this is kind of inspired by a couple of things I read and watched. And this is more of a show that, or more of a tell than show, but when we're talking about options expiration and earnings season starting and economic news, there's always a lot of curiosity of what can I do to make money? How can I maximize the effect? And, when we talk about expiration, when we talk about economic events, when we talk about earnings, Netflix has earnings tonight. People want to know, how can I trade it? What's the best way? Should I sell premium? Should I buy premium? What should I do? CPI is coming out. This is coming out. I'm bearish on the market. What should I do? And the short answer from me, based on as a trader since 2007, coming up on 20 years, when I look at all my old options trades or binary event trades, at best, I've won on 40% of them. And it's a coin flip when it comes to a binary event. Binary event being an economic report, earnings report, something, an FDA decision for a biotech. So if you like flipping the coin in terms of your trading strategy, well, I'm going to say good luck to you because it's not going to work out for you. You're going to cost yourself money. So let's get into it a little bit. So on expiration, I'm going to show you a couple of things. So third Friday of every month is options expiration. Now that's been kind of skewed a little bit because we have weekly expirations now for a lot of stocks, and then we have daily expirations for some of the indices. But for the most part, the vast majority of stocks trade on a monthly expiration, the third Friday every month. And we're basically looking at the open interest. How many contracts were bought or sold and are still open as of a certain date? The open interest is updated every evening, overnight. It's not updated like volume is on an intraday basis. So if open interest is at 100 and somebody comes in and buys 900 of these particular calls, the next day you're going to look, and they don't close them in the same day. The next day you're going to open up your platform and see that it has 1,000 of open interest. Institutional players, market makers, they have a strong influence on order flow and pricing. And so these market makers are not here to make you money. They're there to make themselves money. They're there to make markets for you, but in the end, they are trying to make a few bucks themselves. And then you have the big institutional players, the ones with a lot of money, the banks, the hedge funds, or what have you, who may have sold calls or may have sold puts and have a vested interest in making sure those calls or puts expire out of the money. And they are very well capitalized. And it may very well be that they're trying to get the price moved to a spot where they don't have to pay off on those bets. Some people call it manipulation. You can call it what you want, but this is, natural market. There's participants at the small end, like us guys, buying 1, 2, 10, 20, 30 calls, and those institutions that are providing the liquidity and selling those puts and calls, who are very well capitalized and can affect the order flow and the expiration of options. Weekly options expirations, same deal. The way to approach options expiration, and during options expiration week, I'm very hesitant to put on any swing trades. That means short-term trades, because there's so many cross currents. I'll put on a put sale. I'll put on a long-term play like we did on Baxter. But for a short-term swing play, I'm going to hold back because there's just so many cross currents during options expiration week. And so if you want to get an idea, and I'm going to show you in a minute on the Thinkorswim platform, where you think a stock is headed, and we have a prime example with some of our trades where we closed them out this week, and they are definitely headed towards the strikes with the highest open interest. Some people say that's bunk, that it never happens. I'm here to tell you that it does in fact happen. Earnings season. You want to play earnings, you're gambling, plain and simple. Your odds of making money over a long term on earnings is at best a 50-50 proposition. You want to sell calls on or puts on Netflix. That's one of the most volatile stocks out there. I wouldn't do it. You want to sell iron condors? Sure. I mean, selling iron condors to harvest some of that volatility can work out, but Netflix is a name, for example, that is known to move 2 or 3 times the expected move on earnings. And for me, I learned my lesson the hard way. If there's a mistake in option trading, I've probably made it. Could probably write a book on it, but in any case, if you want to trade earnings, my advice is play with an earnings run like we've done with AMD and some other of the stocks, RTX, or wait at least 2 days after earnings before putting on a trade for things to settle out. I'm not a big fan of playing a big downdraft on a stock after earnings, although I have been known to pick a way out of the money put spread to sell on something that I think has traveled way beyond the expected move and has a good probability of recovering before the next expiration. When you buy options, whether it's spreads or calls, the volatility will collapse after that binary event. And while a spread will reduce the impact of a volatility collapse, it's not entirely a fail-safe way to go. You will still lose money on a put or call spread if the move on earnings is less than the expected move. And I'll show you a little bit about that in a second. So when it comes to earnings, play it before. And for a swing trade, get out. If you have more of a long-term trade, then this doesn't apply to you. This is got something that's out 6-7 months. Volatility is not affected, and you know you're going to be in the stock for a long time. I'm not talking to you. I'm talking to the people who have short-term or swing trades that are for the next month, because you could go out a month, you could go out 2 months to buy your calls. They will still feel the ripples of earnings. And especially if a stock falls hard and you own the calls, maybe the volatility doesn't collapse, but an option with a 30 or 40 delta all of a sudden has a 5 or 6 delta. You're not immune from the effects, especially if you pay more premium going out months. I used to do this. I would go, all right, I'm going to buy something 2 months out or 3 months out. And if it works for me, it works. But guess what? What happens when you go out 2 or 3 months and the stock goes in your favor? You don't get as much of the effect because they're so far out in time. But if the stock goes in the opposite direction, next thing you know, your 40 delta, your 30 delta option is now a 5 or 6 delta option. And all that extra premium you paid was for nothing because you lost it, not due to volatility collapse, but the fact that it's so far out of the money. Avoid holding swing trades through earnings. Prefer, as I said, the rally into earning trades under 2 to 4 weeks before earnings. So you'll see me do that once in a while in a room, have an earnings run like we did with AMD. You know, Disney, we have that on. Disney will be coming up in August, I think, for earnings, PLTR, a couple of weeks, RTX. So you want to plan exits before their earnings. So key economic events, another one where you want to flip a coin, go ahead on earnings announcements and what's going to happen. Been there, done that. Don't do it anymore because more often than not, you may know what the report is. They say sometimes even if you have the report in hand, you honestly don't know what the market's reaction is going to be. And sometimes the reaction is exactly as expected, but guess what? By the time the open comes around, you're long those puts or long those calls, and the market is already lost that bump or that dump, so to speak. So next week we have some key economic events, and none of them are really that hot of announcements like we had CPI and PPI. Durable goods on Friday could be impactful, but Fed Chairman Powell's speech could be impactful. And you'll see on those days when they have what I call red star events, that the volatility will be slightly higher on that day to kind of reflect some uncertainty around that day, especially with SPX or NDX options that have daily expiration. So keep an eye on economic events. Know your economic news. I don't care what the Richmond Fed is, and I don't really care what the conference board says. I don't even care what durable goods are. I just want to be aware of it happening and know that the event could have an effect on volatility, and whether durable goods was better or worse than expected, and how the market reacts is what counts. So some actionable strategies: monitor your open interest ahead of expiration, and I'm going to show you that in a second. Be cautious around earnings. Avoid holding short-term trades into earnings. Just don't do it. Watch high-weighted stocks with upcoming earnings. Stay informed on economic data and plan your swing trades around and after. So let's take a look at this, and I'll post this presentation on for those who want it. But let's go to Thinkorswim so we can wrap this up a little bit and not keep you guys longer than an hour. All right. So let's take a stock. Hood. Or should I find one that we have a trade on? All right, let's try RTX. We've had a trade on that one. We close this out today. All right. And let's take a look at our July options expiration. Okay. And so maybe this is not such a good example. I'm going to scroll down, and RTX is trading at 150. And open interest is right here. And so what I want to do, if I want to figure out, and some people call this pinning action and expiration. And so I want to look for, within the calls and within the puts, where do I see the highest open interest? At first glance, you can see that the highest open interest for RTX on the call side, there's 5,000 open contracts at July 150. How about on the put side? Well, there's not as much open interest. So my guess is they're going to hold this slightly above 150 tomorrow, because this is where they can cause a maximum pain in terms of expiration. 5,000 of these contracts will expire tomorrow if worthless if they hold it at or below 150. And believe me, you can get there. It's only $1.71 away. And this is kind of the reason why I decided I'm not going to hold this into expiration, even though it could head up. But you know, all best laid plans, so to speak, can be affected. But here you can see that amongst the puts and calls, this is the highest open interest. Wouldn't surprise me to see RTX close right around the 150 mark. Let's take a look at another one, XOM. All right, trading at about 111.85. Let's call it 112. Wouldn't you know, highest open interest on the call side, right there, 11,003 on the 110 strike. And if I take a look at the chart of XOM, what do you see happening this week? It's kind of been declining, you know, after a nice run. It came down in here. This is not conspiracy theory stuff, guys. This is real world option and market dynamics at play. And, you know, if you have the capital, you can call it manipulation. I wouldn't call it manipulation. I would call it that, you know, well-positioned entities are flexing their muscles in the option market, and that's what happens. So 11,000 there on the calls. On the put side, they also have a nice open interest, 4,066 at the 110 strike, 43.02. Yeah, I mean, if they could get it under around right around 110, they'll cause a maximum pain for all of these um, strike puts below 110 to expire worthless. So there's 11,000 there at 105. And so those will definitely expire, are going to expire worthless. You can see that. But the game here is probably to get it at 110. We'll take a look at one more. Let's take a look at Dell because we had one there. I don't think there was much um, in terms of open interest on Dell, if I recall correctly. Here we go. So here is the another reason why earlier this week I decided that we close out our Dell trade. And you can see from the chart, um, and I apologize, it's a little messy, but it's been coming in all week and wouldn't surprise me one bit. Look at the open interest at the 120 strike. They may not get it down there, but it is within reach, believe it or not. Um, if this comes down to the 120 strike, that's 5,000 open interest on Dell. And Dell is not really a big trading stock. But look here on the put side. If they can get it down to 120, then these are going to expire and these are going to expire. So how do you use this information? Okay, Sam, um, this is all nice and interesting, and I can kind of figure out from here where things might fall to and decide whether to close things earlier than normal. But the other thing is, when you know this kind of stuff is happening, and let's say there's a stock that you're interested in, let's go back to ExxonMobil and as an example, one that I have my eye on. If they get it at under 110, what happens is um, after expiration, these stocks are free to float back up to wherever they are. So if I was interested in ExxonMobil and I see it coming into the 50-day or is that the 21? Let me make sure my colors are all screwed up. Yeah. I mean, we're coming into the 21 day, and if this holds, maybe I want to put a trade on ExxonMobil. So if you know this and you know why, sorry about that. And if you know that, then you can plan for your next swing trade using this open interest information on particular stocks because you know that whatever's happening may be a bit artificial and you would expect a bounce in the following week. And sometimes you do see that on the Monday following options expiration. You do see somewhat of a bounce in some of these stocks that got hit on expiration. So not everything that you see during options expiration is due to options expiration, but if you see weirdness, and especially tomorrow, and I'm going to advise that if you have options that expire tomorrow, I don't care if they're out of the money, in the money, you either close them or roll them. Don't go into options expiration with options unless they're deep in the money. They're going to be assigned, you're going to be exercised, and your account can handle them. Avoid going to expiration because it's just the wild, wild west. You just never know what can happen at the last minute and can affect your position. Shenanigans are happening all the time. So just consider whether you want to take the risk of taking things into the last minute. You can do what you want, but in my opinion, be out of option expiration by the end of the day today. If it's deep in the money, it's going to be a sign. Maybe it's not so bad, but again, I've seen some strange things in my years of doing this. So let's take a look. All right, so that's what I had for you guys on this. And so if I look at the presentation, so using technical analysis, look for your high probability trades, rallies into earnings rather than speculative bets. understand that binary events are at best a coin flip. You have no edge, so don't bother. Believe me, I did it for years and I lost more money than I made, and I don't do it anymore. When it comes to earnings, I either trade ahead of earnings or I wait a day or two after earnings, wait for the dust to settle, and then I get into them. And then take advantage of tomorrow. Tomorrow is a weird trading day to look at the stocks you want to buy, see if they're edging towards their high open interest, and see if there's an opportunity next week to maybe get into some of these as they normalize for the next options expiration. Let me double check, see if there's any other calls. Show the summary page again. I think this is what you were talking about. And yeah, and I will have this posted. And we did get the last presentation posted. If you don't see it, it should be out there with live webinars. And I'll get this to Karen to get this posted. If there are no more questions, then I thank you for coming and joining us. Tell your friends about us, and I'll be back next week with Dan. Appreciate it, guys, you being here. Thanks for being a member of OMM, and I wish you a great options expiration and a great weekend, and I'll be back with you on Sunday with the weekend video. Take care and have a good evening. Bye-bye.